Hello and welcome to interest.co.nz. I'm Gareth Vaughan with another of our double shot interviews, and I'm joined by Shamubeel Eaqub, who is the Principal Economist at the New Zealand Institute for Economic Research. Welcome, Shamubeel. Great to have you here.
Thank you.
Look, we'll kick off with the most topical issue, given we've just had the Consumers Price Index out this morning. Now, up 0.3% in the March quarter and 1.5% in the year to March. A little bit lower than the median of economists' expectations. What did you make of the figures, and what, if any, impact do you think they'll have on the Reserve Bank's OCR decision next week?
Yeah, so the inflation numbers have been quite subdued for the last 3 or 4 years, really, and it's been very slow to pick up to levels that we would consider normal. And part of that has been that the economy has been slow to recover. Businesses don't have a lot of pricing power, and that's kept inflation low. But also what we saw in the latest quarter was most of the downside surprise in inflation was in tradable prices. So we don't think that's a big issue for the Reserve Bank. On the domestic side, which is not open to competition from the world, the annual inflation rate is now at 3%. It's been steadily accelerating and driven by things like construction costs in particular. And we're starting to see that spread out from Canterbury to Auckland now. And they will find enough in the data that says that, yes, inflationary pressures are coming through. They're domestic in nature, and the medium-term outlook is worrying enough to keep removing stimulus from the economy.
So you would anticipate another 25 basis point OCR hike next week?
I'd be surprised if the Reserve Bank stopped on their path of hiking gradually over the next year. We think that next week they will definitely raise by 25 basis points, but also that's part of a series of hikes, probably peaking at around 4% early next year. So
if the OCR goes to 4% early next year, where do you see mortgage rates?
So floating mortgage rates, we think, will be just over 7%. So, that's quite a big hike from where we've been in the last few years. But compared to history, that's about the historical average. So really, we're talking about taking interest rates back to a more normal level after this extraordinary period of really cheap interest rates.
Now, we're always interested in house prices around here, obviously, interest.co.nz, a great debate around those. We've had some sort of interesting data out recently, NZIER and QV figures sort of quite different, almost opposite each other. NZIER talking about house price inflation rising in March to an annual rate of 9.2%. QV said it had slowed to 8.8% in March. What do you think is going on out there at the moment?
I think the housing market is going through a bit of a soft patch. So we're just going through this transition period where we had a lot of uncertainty around the LVR restrictions, which came on and created just a lot of disruption. But the overall trend since pretty much about 16 to 18 months ago, the trend in the growth of mortgage approvals, house sales, house prices has generally been looking like it's coming down. In the last 9 months in particular, we've seen the volume of house sales starting to ease off, and that's kind of sped up in the last 3 months in particular. And Auckland, which has been absolute the hotspot of house price inflation, just seems to be on that turning point now. Now, it may be too early to judge whether it's from the LVR policies or it's other things like rising interest rates or banks becoming more cautious. But it feels like the housing market, which had been just rising very, very strongly and almost without any stop, is now taking a breather. And with the Reserve Bank raising interest rates, it feels like there are some big concerns around whether house prices can keep rising in Auckland, and they may even start to fall if house prices keep falling further.
So what's your outlook for, I guess, the balance of this calendar year for house prices, I guess, in Auckland and New Zealand more broadly?
Yeah, so when I look outside of Auckland and Canterbury, I see house prices doing practically nothing, as they have done for the last 3 years. So real house prices outside of Auckland and Canterbury, they're fine. They haven't really done much. In Canterbury, a lot depends on whether the supply comes on, and there's a lot of uncertainty around that. In Auckland, everything that we see in Auckland is there is a huge amount of speculation that's driving up house prices. And I say this because when we look at what's happening with the cost of housing through rent versus houses, rents haven't really done much. They're very subdued, growing at a gradual pace, but house prices were rising at a very fast pace. That means that there is no shortage of actual houses, physical houses, but a shortage of investment properties. And that dynamic can turn very quickly And when you run out of investors, house prices can't sustain the levels that they have achieved in the last few years. So our prediction is that over the next 12 months, we are going to see housing markets slow in Auckland, but it's hard to tell by how much. It's been a mug's game, really trying to forecast house prices, never been right. But everything that we see on the fundamentals is that Auckland housing does not make sense relative to incomes, relative to rents, and the downside is in the order of up to 30%.
Really?
Yes.
What about migration? I mean, we're seeing a steady flow of migration into Auckland. Surely that's going to help keep things ticking along?
Yeah, the migration story is important, and you can get short-term dislocations if the supply doesn't keep pace. And of course, there is a lot of discussion around housing supply in Auckland, in particular with the Housing Accord and whatnot. But those disruptions can usually only last 12 to 18 months. So we tend to supply houses one way or the other. So the migration flows can give you, I guess, a little bit of cyclicality around house prices, but the fundamentals really have to be around incomes and house price and rental prices. And those things have detached to a level that are quite frightening. And what we've seen in the provinces of New Zealand is very similar to what we see in the US or in Spain, where once the investors ran out, those marginal buyers, that speculative buyers, prices go back to a level that's more sustainable. And in Auckland, that's really the big concern, that even with immigration, the prices don't stack up because it is getting so expensive now that a small shock can really make a big change on house prices.
How small a shock do you think that could be? And I mean, in terms of a downside for Auckland house prices, just how bad do you think, or how far could they go in a sort of medium-term scenario?
The perfect storm would be increasing supply, increasing interest rates, and some kind of shock to the economy, say from a slowdown in China or a slowdown in Australia, that has a big impact on jobs in Auckland. That would be the perfect storm that would be required for a sudden fall in house prices. A more likely scenario, if we don't have that kind of fairly risky scenario, it would be that house prices don't do anything for a period of, say, 10 years. You might get a small fall and it just keeps going sideways. Incomes and prices and everything else catches up, which was really the experience of New Zealand right through the early part of the 1990s. If you'll recall, nominal house prices literally did nothing for a decade.
You've also, I mean, you've questioned the official figures in terms of the undersupply of housing in Auckland. Obviously, we've got this Auckland Accord involving the council and the government. Can you just remind us what your views are on that?
Yeah, so we don't think the shortage of housing is nearly as big as was previously feared. So the numbers were up to 30,000. Yeah. And that sort of relied on a number of assumptions that were just wrong. People were assuming that 2.6 people live per household in Auckland. That's just not true. Auckland's young. We tend to live in bigger households, more like 3.1 people per household. It sounds like a small difference, but that can shave off tens of thousands from your estimates of shortage. But the real kicker has been that the population growth in Auckland hasn't been nearly as strong as the previous estimates suggested. So with the latest census, we've seen that we were growing at a much slower rate in terms of household formation, and there have been pressures. So not denying that there are pressures, but the shortage is probably in the order of 5,000 to 7,000 rather than the order of 30,000. And with the Housing Accord, which is nearly 30,000 homes over 3 years, yep. If that actually comes through in terms of houses, we're talking about moving from a small undersupply to an oversupply of about 10 to 12,000.
Now, you've also had some quite strong views on the Reserve Bank's loan-to-value ratio restrictions that they introduced last October. If I recall correctly, your view was that they shouldn't have introduced them at all. I'd just be curious just to ask you to just explain to us why you don't think they should have introduced them, and what sort of impact do you think they're having, and where do they go from here?
Yeah, the LVR restrictions, the thing that I've really struggled with to understand what the channels are and how effective they are and how effective they could be, because it is such an opaque tool. The international evidence is that when you introduce it, you absolutely kill that high LVR market. That's the intention. But the impact on total credit, the total housing market, is completely ambiguous. But the other thing that you find is once you introduce these kinds of rules, you tend to keep tinkering forevermore. You might change the rules a bit here and a bit there, but you keep hanging on to it because there is that incredible opportunity to interfere with the economy that reserve banks around the world find very difficult to let go. So we were very skeptical about that. But the real reason why we didn't want the LVR restrictions introduced was the other tools they had in play would have been far more effective. So if they had increased the amount of capital that banks are required to hold, they could still use their systems to ration credit as they saw fit and as they could best maximize their returns and risk. Instead, we went for LVR restriction, which is far more prescriptive and just less direct and less understandable from my point of view.
Now, it's obviously an election year this year, and I was just keen to ask you, as an economist, what economic issues you think should be big election year issues?
I won't be very popular for saying this because they're not sexy. I want us to have a really good conversation about superannuation, about healthcare, but most importantly about education. I've been doing a lot of work in regions over the last 3 to 6 months, and one of the things that I find is this massive disparity of economic opportunity and outcomes in many of our provinces. And the biggest failing and the biggest weakness is our education system is not making them work ready and future ready for the changing economy. And it has to be about education. It has to be about our young people, because if we can't create those opportunities for our young people, we are going to have this divide across New Zealand of those who have the haves within the urban centres and the have-nots who are in the provinces. And I don't think that's the future of New Zealand. We must be far more inclusive than that.
And superannuation, what's your view there?
Superannuation easily fundable if we gradually raise the retirement age or the eligibility age with life expectancy, and I think that's exactly what we have to do. But the bigger issue is around health. That's been a subject that's been very successfully and skillfully kept out of the headlines over the last 3 years, and I think Tony Rail's done a great job as a politician. But we know that healthcare costs are going to be the biggest drivers of government expenditure over the next 20, 30 years. And we need to have a very transparent conversation about this, because we can't keep doing what we're doing. We have to contemplate increasing taxes, or we have to think about subsidizing private insurance, or we have to change access to healthcare in terms of rationing, elective surgery in particular. None of these are easy things to get rid of or change, and I think the sooner we start the conversation, the more likely that we will have acceptance and a prepared population for the changes that are inevitable.
Well, it looks at the moment as if housing is going to be the biggest election year issue, perhaps, but some very good food for thought there. Thanks for that, Shamubeel. That's Shamubeel Eaqub, and the Principal Economist of NZIER, and I'm Gareth Vaughan at interest.co.nz.